According to a report by the Wall Street Journal, China's exports in US dollars decreased by 7.5% year-on-year in May. This means that China has ended the pattern of positive export growth for 2 consecutive months since March. Meanwhile, imports also decreased by 4.5% in May. In March, China's exports unexpectedly surged by 14.8%, ending the consecutive negative growth since October last year. In the same month, the decline in imports narrowed significantly to 1.4%, achieving a trade surplus of $88.19 billion, which was better than market expectations. In April, China's exports increased by 8.5% year-on-year, while imports decreased by 7.9%, achieving a trade surplus of $90.21 billion, an increase of 82.3%. The three carriages of the economy are export, investment, and consumption. In the overall downturn of real estate, the importance of exports has become more prominent. And exports seem to have ended the post-pandemic growth momentum and turned sharply downwards. According to a report by the Financial Times, China's share of U.S. imports continues to decline. As Western companies relocate their operations outside of China, China's share of low-cost imports from the United States and Asia will drop to less than half this year. The Annual Return Index, compiled by Cornuds, a Chicago-based management consulting company, shows that the United States is importing from other Asian countries with lower costs outside China in order to reduce its dependence on China, and American buyers are becoming more sensitive to prices. The report points out that in 2022, Chinese goods accounted for 50.7% of the manufactured goods imported by the United States from Asian countries, a significant decrease from nearly 70% in 2013. One of the authors of the report, Patrick van den Boschje, stated that China's share of imports from low-cost Asian countries, excluding Japan and South Korea, by the United States will definitely decline to less than 50% by the end of this year. The report also shows that while China's exports to the United States have decreased, U.S. imports from Vietnam have doubled in the past 5 years and doubled in the past 10 years. India, Taiwan, and Malaysia account for a larger proportion of Asian products imported by the United States. Although all the above data indicate that China's exports and even the overall economy are in a period of stagnation. Many experts, including the general public in China, seem to have lost confidence in the Chinese economy, but in my opinion, there is a high probability that the Chinese economy will strengthen again. Firstly, the economy is cyclical. Economic growth and recession are normal stages of economic operation. As the world's second-largest economy, the Chinese economy has experienced a rapid growth phase in the past few decades. In this process, China has made tremendous development and progress. However, with the development of the economy, the growth rate may slow down or even experience some degree of fluctuation. Therefore, the decline in China's exports and import proportion can be seen as part of the cyclical adjustment of the economy. Secondly, China remains the world's factory. The relationship between China's manufacturing strength and the global supply chain is an important pillar of the Chinese economy, although in recent years, some companies have moved their business to areas outside China, that is, to implement the so-called deSinicization. But China's manufacturing base and scale are still unmatched by other countries. China's competitive advantage and technological progress in the manufacturing industry provided with sustained competitiveness. Therefore, even with a decrease in the proportion of imports, China still has the potential to attract foreign investment and maintain its leading position in the manufacturing industry. In addition, the existing domestic demand potential of the Chinese economy cannot be ignored. With the advancement of China's urbanization process and the improvement of residents' income levels, the scale of the domestic demand market is constantly expanding. China is an indispensable part of the target markets of many international multinational companies, whether Tesla, Volkswagen, Nvidia or Apple. Although China's population has begun to shrink, there are still as many as 1.4 billion people, a large market that no enterprise can ignore. There is an ancient Chinese saying that a skinny camel is bigger than a horse. Although the road ahead is vast, the Chinese economy remains an undeniable presence in the world today and in the next 3 to 5 years, and the Chinese economy is highly likely to enter a strong cycle again, and we can wait and see.